Just as we spoke about earlier this week, when we thought it was getting kind of cold in the air and a crypto winter felt like it was coming on, you can see on the screen right now by the heat map what's black, white, and red all over. It's cryptocurrencies because they're red all over and that's black and white. Bitcoin has actually shown resilience compared to all the other altcoins because there is basically no coin besides the stable coins that held on as well as Bitcoin. I mean, Ethereum 25%, Polkadot 30%, Cardano 23%. They're basically all 25 to 30% drawdowns, and Bitcoin is only drawn down by 11% today. So that's definitely a bullish sign for Bitcoin. Also, its dominance is ticking up as we speak. If you recall from earlier this week, we noted that Bitcoin's dominance fell to 40%, and now it's risen to 43.77%. So it's regained some of that market cap. So this cherry tomato of a heat map, if it's not signaling that we're in a crypto winter, it is for sure signaling that alt season has officially ended. Looking at our BTC continuous futures chart, we can see that the low today actually came in right at the 200-day moving average. But to really see the devastation, we have to turn this into a weekly candlestick chart. And when we do that, and by the way, this is the first time we've been underneath the 20-week exponential moving average since the crash we saw in March 2020. So the fact we started out this week below that was a bad sign. The fact that we traded up to but were unable to trade above that moving average is a bad sign. And only good news we can really glean from this is the fact that it traded well off the lows. Let's go ahead and put in our fib retracement. You can notice that the 61.8% retracement at approximately 30,000 has been support before and seems to be support now. Remember, earlier this week we were saying that if it broke below 44,000, you were going to see 30,000, and that's exactly what happened. Now, let's get a sense of the strength of the downtrend and see if it is growing or weakening. Let's look at a weekly Hankin Ashi chart. If it wasn't clear already, it's clear now that we did hit some sort of apex at 65,000, and we are now going to witness possibly a even steeper or deeper correction. This is the way I'm looking at it. We were in this trend channel right here. I feel we have basically reversed trends and are in a trend like so. So this is basically my projection for the next couple of days to weeks, to follow and stay inside of this channel here. So how that works is basically, these are weekly candles, remember. So basically next week I'm looking for pricing to remain pretty much where it is now. If you look down to say August, if the trend hasn't changed, then we're gonna see once again 30,000 and such. I believe that this flash crash to 30,000 that was quickly bought up as traders bought the dip will remain, although we will stay in this channel until the trend changes back to bullish. This has been Joseph Wagner. Thank you for joining me.